Hey everyone, my name's Andy from Finding Value Finance. I'll be your host today. We've got Kasper or Uselink. He's been on the channel a few times. It's not his first show here.
No.
So thanks for coming on, Kasper. Really appreciate it. Love to have your opinions here.
Yeah, and thank you again, Andy, for having me on. I love to be on, every 4 to 6 weeks, have a quick discussion on what we see in the markets, and hopefully your audience, likes, what they see. So
Okay, so wanted to bring you on. I think there's a lot of stuff happening right now. I know that you're excited about some of the things that you're seeing in the markets. I'm excited about some of the things I'm seeing in the markets. So, what are you seeing? What kind of patterns or breakouts are you seeing? What sectors do you like? What's going on right now?
yeah, as you mentioned, I see a lot of really promising things in various commodities and some ratios, showing that hey, we might have, commodities in this instance, gold actually break out against the broader markets. So a lot of exciting things is happening when you look at it from a commodity perspective. And yeah, should we just start with the HUI here? It's again to me a very clean chart. You have the uptrend here, ping pong in between that whole trend channel, and then the peak there in 2012, trend line, very simple TA. You have breakout, you have retest, you have resumption so far, and my last little hurdle here is roughly, 375, give or take. To me, when that gives in, you have the gold bucks index here with a massive breakout, and these again, it could take us to a lot higher prices over the next 5 years. Um, so yeah,
The
truly
Huey,
a yeah.
the Huey is the gold bugs index. Do you know, is that like gold, silver mining companies, or do you know exactly what the index is made of by any
No, I do
chance?
not know. I do not know by any chance exactly what it is. It's just I think I can't remember the guy on Twitter that is very fond of it. Big account. So that's why I've been following it for quite some time. So
Okay, okay. So we're about to break out. That looks good. Big bull market.
yeah, it seems like yeah.
And this breakout, what I mean, does that mean that the miners are ready to run, mainly speaking? Because
Yeah,
the way that I look at the Huey is like a representation kind of the gold and silver mining companies. So that's kind of what we're looking at is a potential big run in the gold miners, perhaps, and then maybe even silver to come next, silver miners.
yeah. And speaking of, again, we can just have a sweet transition to the
Sure.
GDX here, which everyone knows, right? And to me, again, quite similar. You have the highs over here. You have the breakout, you have the retest, you have the resumption. You're even breaking again a roughly 20-year trend channel as well. So this looks incredible from a technical point of view. Again, you even have to agree, right? That is just, I mean, that it doesn't get much better than that. And the next stop for me in the GDX is the all-time high, excuse me, the 2011 high there at roughly 67, before we see any major resistances. Yeah, it is looking very, very good for the miners. Not gonna lie. And
You know what that looks like? It looks like Nvidia in 2009 to 2013, 14, somewhere in there. It had
okay,
this big kind of consolidation sideways, just like this. And then it broke and ran for for many years
yeah,
after that. So do you think that this is a launching pad to a much higher level above $67 per share?
yes, for sure I do. I mean, the all-time high there in 2012 will be big resistance, and we'll probably see like a pullback, people shorting, all that good stuff. But again, down the road, this should take us a lot higher. And also, if we can actually, even though we don't have it on here, let's do the GDX. I think it is the GDX divided by the SPX here, just to give a different view here. Or was it the GDXJ? I can't remember. 1 second here, because I think it was actually breaking out, if I'm not mistaken here. Uh, Again, here, this is You can just see it there as well, right? So that is the ratio against the broader markets. Again, we're still not making any higher highs or anything, but the downtrend from the highs from 2010 is broken. And again, we should be in for a period where the gold miners, in this case the juniors, but also the majors, should do better than the SPX. Again, the SPX can go up, but again, the miners should outperform that.
Do you think we're still going to get more choppiness, or do you think it's going to be kind of a straight shot? What's your? I know it's a tough one to answer, but what do you think's coming? Because a lot of people, do they still have to endure a lot of big pullbacks, or do you think it's just going to be kind of a steady march higher?
I mean that I think when again I have a different theory or a view of the gold silver ratio. Once we start to trade below 87, give or take, that is where we have, in my opinion, confirmed a massive false breakout in that ratio. And once you start to see that ratio come down very hard, the miners in general does amazing things. And we saw that also in 2024 when we had two false breakouts. But during those false breakouts in the ratio, the mining sector, some mining stocks went up 500% in like 6 weeks. And that is what is to come once we start, hopefully, to trade below those levels in that ratio. So, and yeah, here we have the silver miners, the baby sister to the gold miners. Again, 15 years worth of just squeezing up here. Again, very simple stuff. But this is where, big monies are made. These are the big, squeezing patterns, 1.5 decade. I mean, what's not to like, in my opinion? And it seems like we're trying to break out as we speak here. Again, this is the monthly time frame. So again, one candlestick is 1 month worth of trading. So it's very long time frames. But once we start to clear here, getting above 45, I don't see any reason why you shouldn't be in silver miners. It doesn't matter what sector it is, if it's gold, silver, crypto, whatever. A chart like that, in my opinion, has my attention all day long. So yeah, very
Yeah,
close, very close.
that looks pretty dang good. And you brought
Yeah,
up the gold to silver ratio. Can we take a quick peek at that just to see what you're talking about
yeah,
with the
we can do that easily. Here we have it
ratio
there.
here? You
Even though
said
I don't have,
false breakout, and when we
yeah, I
drop
don't have,
below, yeah.
yeah, I don't have the lines on this template here, but I can quickly add it on here because I've been, looking at it for
Yeah.
some time there. So there it is. And, zooming in shorter term here, once we start to trade below these hanging fruits there, roughly 87 or so, this to me is that, hey, we're going to go like that, in the ratio, and basically the mining sector in general will do really, really well. And the ones that I referred to where things went, really well for the mining also, that breakdown from that trend line, I also said, hey, we're gonna go much lower, but it was a false breakdown. But during that period, I think you had Aftermath do 600% in like 4 weeks. A small player, I know, but once you have these major breakdowns, that's when the mining sector as a whole, it doesn't matter if it's copper, iron, or whatever. That is the sweet spot for and the key, in my opinion, to the mining sector and when it starts to really, really move.
Yeah, it's good. Here's another question. I know we're on gold and silver right now. Do you think that all commodities are going to run when these guys are we all going to break out together, or do you think that gold and silver is going to run first and then maybe energy and fertilizer are going to run next? What's your opinion there?
I think always, well, almost always, gold is leading, and then it will lead for quite some time, and then it will stall, and then you will have various commodities take over from period to period. And yeah, I think we are at that point in time where gold might not go up as much, but that means that the rotation, in this case here, the gold silver ratio, if we start to trade below 87, that some of the gold, longs are converting over to silver, and because that is a better investment at that point in time. And we have to remember gold has gone up like $1,000 for in like a year. So to me here, commodities in general will take turns, but will do really well. Platinum as well. We can look at that in just a few seconds here. I think as we have been talking about for like half a year, anything above like 1050, hey, we are ready for business in that one as well. And when it breaks out, it will easily outperform gold during that period. But remember, for the past year, gold has outperformed heavily platinum, so it will take over once it breaks out, and we can have a look here. A lot of things going on here, I know, but it hasn't changed since we last spoke. 1050 roughly. You're breaking again here, long-term trend lines, short-term, flags. Everything is set, and once that gives in, we will have a sharp move easily to the highs of 2021. Pause, pull back, and then all the targets up here from various fractals, and we could see 2K within 18 months or so. 2K sounds insane, but that's only 100% only. I know it's a lot, but still, compared to what we have seen in other sectors, that is not that much really. So that's what I'm waiting for platinum. It could be in a week, it could be in a month or two, but still, I know my level when to get in heavily, and that's 1050.
I'm already in heavily, so
Yeah, I have my partial position, but it definitely I know when to get in. It's a very, very tiny market, especially the miners. There I think there are like five that you can say these are quality. Everything else is basically like a lottery ticket, but they can go up 1,000% easily. But tiny, tiny, tiny market. And if we see that move here in platinum, I mean, these guys will do insanely well. If you can handle the volatility, you should be good.
yeah. And another sector that I've seen break out recently has been copper. What's
Yeah,
your
copper.
thoughts around copper there?
I mean, copper, I have been bullish for quite some time here. Again, together with, the Substack, again, went long here at roughly 4.4. Our first target got hit there at the 4.8. Next target we are about to hit, I can see the highs of 2024 at roughly, $5 or so, 5.2 actually. Um, but again, if you zoom out, I mean, this is, oh, excuse me, we could be seeing, $7 here, in 2026 if things gets really, really out of hand. And yeah, Dr. Copper, that's inflation, that's silver going well, doing well, that's platinum doing well. It's a good precursor. Once we start to trade close to 5.5, I will say, hey, we have a move to 7.5 over the next year or so in copper. Um, so yeah, as long as we you know, continue to see these very beautiful. You can also have like a cup and handle there if you really want to to have that view. Again, copper looks really strong here, but we are close to big resistance here, 5.2 to 5.3. You have the trend line coming from here, and then you have again previous highs is always resistance. So, but long term, yeah, it looks really, really good. But wouldn't be surprised of a 10% pullback, 20% pullback here excuse me, 5% pullback here in the short term. And that would be perfectly normal.
Speaking of copper, doesn't copper and energy trade very similarly in these bull
Yeah,
markets?
yeah, they
So what's
do.
going on with energy? What's going on with oil?
Yeah, oil, I mean, I don't have it on here, but we can have a look here. It's still, there are many oil bears, and I will say rightfully so, looking at the chart. But again, we haven't been breaking down, and yeah, it's just we're still holding here 65, but I think the long-term chart speaks for itself. We're going higher. It's just the pathing or the routing that can be tricky. But again, here that whole setup there, again, false breakdown or not, I think we're gonna go way higher in like a few again over the next 2 3 years. I think we will be way higher. It just depends on if we're gonna see roughly 50 first, or if we're just gonna break out. Um, but it's definitely
What would you,
hanging. Yeah.
or sorry, what would you gauge to say that we were going to break lower versus higher? Would you look at an ETF and like XLE and be like, hey, look, this thing looks good to break to the upside. Therefore, oil, we're seeing positioning in the ETFs. So wouldn't that kind of be good for oil to break to the upside versus a false breakdown?
Yeah, I mean, you typically see the move happened first in the more leverage kind of stuff, which is XLE and XOP and those guys. So I track these together with both the USD, WTI, but also crude and gasoline, because sometimes you get the signal in crude before the WTI. So there's uh, various ways of doing it. And yeah, I have like 7 charts that I look at from a weekly, every week and just see where we are. And right now, oil, USD, that is, the WTI needs to break this little downtrend here from basically the start of 2025 and start to trade north of 69. Then again, I think that low is in. But for now, it's just, basically hanging in there, not really sure about what to do. So
So are you bullish or bearish at this time, Casper, on oil?
again, somewhat neutral here because we're still, squeezing up here. Long term, if you're talking 3, 4 years, sure, really bullish. But again, short term, we could be turned bearish and then we can turn bullish. So again, it all depends on which route it's going to take for me. And currently, I have a like a starter position, you can say, just to I'm in if whatever happens. But again, once we start to see the real move to the upside, I'll definitely, start to scale in more. But I have my little tiny position, so whatever happens. But I'm ready to add in more when I get the signals that I need in order to do that.
Yeah, I'm in big.
Yeah, I mean,
I bought
with it,
the bottom of a lot of these equities already, so I think they bottomed already. So that's me. We'll
yeah,
see what
yeah,
happens.
yeah.
So we've got copper. Copper's broken out. Oil's kind of lagging. Gold and silver look fantastic. The miners look really good. They're breaking out against SPX and all these other ones. What other things are you seeing here? Do we talked about platinum? You said something about rhodium when we jumped on here too. Although we got XLE versus
Yeah,
SPX
just
there.
Yeah, just before we go on to rhodium again, no one talks about rhodium, but I think like 5 years ago, and for the next 2 years, it rallied. I think I have many multiples and has pulled back a lot ever since. But that's um, a commodity that you don't hear a lot of. But before we go to that, you can see here the XLE divided by the SPX. So still overall flagging after we had that major bottom in 2020. But we had now some internal breaks here, meaning we should be seeing some outperforming short term. And then potentially, if we can break on the fourth here, you have XLE outperforming the broader markets also. And that's a very good. If you're into a sector and you start to outperform SPX, that's a very good, check mark to have, because that means that you are outperforming the broader markets. And that is basically what everyone is trying to do. Everyone is trying to beat the SPX. So that is a good measuring tool to know if you're outperforming the SPX or not. Because if you're not, you can just as well just be in the SPX and do, I mean, whatever everyone else is doing. So yeah, still waiting for that whole flag here to break out. And we just had an internal break like a few weeks ago upon that little 2023 squeeze coming down to there. So that was a good start for XLE against the SPX. And yes, rhodium. We are starting to see early signs of a roughly 4-year trend line breakage here, like a rail. And in my opinion, anything above 500 on the spot price for rhodium, and we have a 2-year bottom in place. And again, that could also be the start of something quite big for rhodium. And yeah, that was the move I talked about, 2017, like 70, and it peaked out at 2,800 in like 4 years' time. So that is one heck of a move. And so this long-term chart, massive move, and then you have the pullback again, looks really promising. And again, if platinum is a small market, I assume that rhodium is even tinier. So again, that's why you see these moves, by the way, all of a sudden. So
I think it's like 1/6 the size when it gets mined.
yeah, yeah.
Yeah, it's a sixth the size. I think it's like a million ounce market a year or something like that, if I
And
can
that's
remember.
basically nothing. Yeah. So
Platinum gets mined at 6 million ounces
okay, yeah,
a
makes
year.
sense.
Palladium's a little bit less than platinum.
Yeah.
Yeah,
So
that looks
tiny,
ready to
tiny, tiny.
go.
Yeah, again, 500 on the spot price here, and it's popping at least very quickly, very, very quickly to 700 and beyond, in my opinion. But that is the first pit stop for that one there. So
Yep. Yeah, it looks really good. Yeah, we can get into uranium if you'd like.
yeah, sure. I think today was a could be the bottom for the U.UN. I know
Mhm.
that's very difficult, and calling bottoms is not how you make money, but I think I have, for now at least, still some good views that is and could be very much in the cards because we have this. This is the U.UN, so basically we're looking at the spot price of uranium, more or less. 20 to 19 is a major supply and demand zone here, going back 20 years, and we're attacking it here today. So the long term, we are into where people are now buying because we are testing from above. And short term, we still have this very, very precise channel here. Very big bull flag. You can see it here if we zoom out. That is a massive, massive bull flag. And we have just completed with a very high, success rate here, the third impulse, which you also look at, that third impulse in the correction
Yep.
here. That to me, plus very, very short term here, if we go to the 2 hourly. So we have been looking long term, mid term, now short term. Yesterday I said, this could be the day where we confirm that low. Again, by confirm, I don't mean 100%, but you should treat it as a major bottom until proven otherwise. And we had a 5% rally today. Um, and yeah, if this is the case, for the flag, then we could easily see, something
Handle
like
then,
that
right?
over
If
the.
you back way out.
Yeah, exactly. That's the a larger cup and handle as well. So again, that's for future videos. But to me here, this is a could be that low that we have been looking for. Again, very difficult to say looking at, but again, I treat it as a low until I'm disproven. For the spot price, excuse me, the U.UN, and therefore the spot price should start to move higher because it is basically identical, basically here, like that, right? You're getting into testing the breakout lines there at roughly 63. Uptrend is still somewhat intact, even though the uptrend is very, very messy. But yeah, hopefully today here, the 19th of March, it's the that low for the U.UN. And that is also what I think the uranium market needs. It needs the spot price to go higher again um, before you see the miners do well. So,
Miners will do fine. So speaking of URNM here, if you want to pull that one up real
oh
quick,
yeah, 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 we can do
to me
that.
that looks like it's also looking pretty good.
Yeah, this is again just like we went on. We talked a little bit again last week, or was it like 2 weeks? Last week or 2 weeks ago, we bought that double support there on the Substack. Uh, I know you do this a lot more than I do when you buy into, you know, where you are dropping a lot and you buy into support or like a squeeze. But this to me was just too good not to take up on that offer. Again, right or wrong. Again, I thought it was very cheap here. Double support, what's not to like? So we bought it there last week at roughly 31, 32 something on the Substack. So hopefully we are correct on that one. So it looks good, yeah. As long as we hold that little trend line there, everything is more than fine. But I like to buy, the squeezes and breakouts because then I get confirmed my position somewhat straight away, and I know when I'm wrong. So yeah, but still, I
I'm
like
very aggressive.
yeah,
I'll say that. I'm
yeah,
super aggressive compared to most people. But I also study the sector fundamentals and all that.
mm,
And
yeah,
I
cycle
have
time, yeah,
conviction of the bull market. So if I'm wrong, I just wait it out for the tailwinds to come and the sector to rotate. So that's my justification for being so aggressive.
yeah, yeah. Because normally I would just wait, for that whole thing to and then
Yep.
break, and then I will let's go, right? So there are pros and cons because you're getting a better price here, but you might have to wait a little bit more before you're getting confirmed that hey, this was a good buy because you could easily bounce here and then hey, right, that's the other talk. Whereas if you have like a squeeze and you buy into that false breakout, you can easily get out again. So again, there are pros and cons for both uh, ways of doing it, and none of those are correct or right or wrong. That is so.
Yeah, the what I do is I stack charts on top of charts. So if uranium follows, so it becomes like an if then statement. So
Hmm.
if uranium follows copper and copper's broken out, and that's kind of a leader there, then I can be aggressive and start to get into uranium and oil and stuff like that because copper, I think we've broken the upside. I think it's going to be sailing higher. And there's other things I look at like PMIs, like manufacturing indexes and stuff like
Hmm.
that are all positive and increasing. So I'm like, I can be aggressive here because I've got
Yeah.
the tailwinds starting to get better. That's the way I do it.
Yeah, for sure. Again, you have your analysis and you have your way to do things, and as long as you know that it works most of the time, again, you just stick to your plan and do what you are doing best. So yeah.
Yeah, you've got the gold to SPX ratio too. That's more um, spiciness to
Uh,
my bullishness.
do I have it
I
here?
don't know
Oh,
if I
this one
didn't see
here?
it on there. It's just oh yeah, there it is. Yep, Dow Jones to
Dow Jones,
yep.
yeah. So again, you have to remember this is when it drops, gold outperforms. When it goes up, it's the Dow Jones. And to me here, again, we have already broken the 2011 uptrend here. Um, Boom. Right. We had a flag there, which could be, I think we talked about it last time as well. That could be a flag. So if we are to break higher, definitely the Dow Jones were by far in the lead. But so far, that is a, long-term breakdown, and the flag here seems negated in my book here. The flag seems to be, it's no longer a flag. We're going lower. And we have big support down here at roughly 12 in the ratio. But to me, here we also start to see some topping patterns, and we could actually collapse even further. Again, until proven otherwise, that is my thesis. You can see here
Yeah,
we are,
so
yeah,
the way that I view it is that this will break down. So that's why I'm aggressive because I it's baked into the cycles that I watch. So I'm betting that that's going down. Same with
yeah,
the
it's
silver to gold ratio to break down, like all that stuff. Platinum to break upward. Platinum and oil are highly correlated. They're very inflation sensitive
yeah, they are,
assets.
yeah, they are really.
So
And yeah, just to show
someone
it
said,
the
yeah,
other way around here, excuse me, Andy, the XAU here, the gold divided by the SPX, that is a mega trend change. Again, would you rather be in gold here, or would you rather be in the SPX? Again, the SPX can do well, but according to this, you will have gold do better than the SPX over the next 5, 6, 7 years, depending on how long time it takes. But that is a downtrend break, wedge pattern squeeze, breakout. Looks really, really good.
looks insane. In the
Yeah,
last bull market, it was from 2000 to 2008 for most commodities, 2011 for gold, but
yeah,
that's it right there. And it went up
yeah,
the entire time.
yeah. And again, here you had gold breaking out the SPX, in 2002, and platinum started to move. You have palladium, you had the silver, you had your copper, you had everything at that point in time started to move as well. So this is a good indicator that metals in specifically will do really well once you have gold outperforming the broader markets. In my view, it's a precursor to commodities do really, really well for the next 5 years, at least 5 years.
Totally agree. That's that's one of the indicators that I use.
Hmm.
Is that right there?
Yeah, it's
What else do you have, or would you like to share?
I have again we have like 2, 3 charts here before we but again here this is the XLK, which is a tech ETF. And that rising wedge, we were also looking at, not last time, but I think the time before. And again,
Mhm.
this typically breaks down, and so it did. So again, here in this case, you actually have XLE outperforming the XLK because you're breaking down. Again, you have to flip it around in this case. So again, my view here is that we're going to see lower in the ratio, meaning tech will underperform the XLE, the tech, excuse me, the energy ETF as long as this whole thing here holds true. Um, the only thing is we haven't made a big lower low, but again, such a wedge here rarely fails once it's broken down. Again, it can happen, of course, but yeah,
Yeah, this looks super bearish. Good for energy, bearish for technology.
yeah, exactly,
Totally agree.
exactly.
We're gonna go way down. That's my bet. We're going way
Yeah,
lower.
yeah, we are. And same thing here, SPX divided by the HUI, which we looked at initially. Again, it has broken down in favor of the HUI. Again, the gold mining, industry should perform better than the broader markets over the next quite a long time because this is a 10, 15-year breakdown, excuse me. So these breakdowns, they often go, have a lot of time to actually that period, afterwards for like many years to be a better place for the HUI compared to the SPX. Um, I think we should look at should we take the again, this is silver, and as you know, silver hasn't it has done well, don't get me wrong. I think it has actually outperformed the SPX for the last year or so. Um, but again, here you can see silver futures, in this case, divided by the SPY. This is internal, and when internal, I mean this is the overall fractal that has been in place for like 8 years, 10 years. And internally here, we are also breaking out, again, just peaking a little bit. So this is a potential 4-year breakout for silver against the SPY. Again, that to me says if that's legit, we're going to see attack here, and then that's the big one, right? So silver here lagging heavily, but should start to outperform, especially when we get below that 87 on the ratio between gold and silver. That's when silver is by far the better play than gold. And if you have a lot of gold holdings, in my opinion, once you start to see, that 87, 85, that's when you take a chunk of that gold and put it into silver.
Yeah, if you do I did this ratio not too long ago, SILJ versus silver. It's
Hmm.
real low, and it's like
Yeah,
double bottoming. It looks so good.
yeah, I think
Um,
I remember. This is
yeah,
yeah. And that one there, that's the March 2020. That's an anomaly in my view because, everything was so distorted. And that is the big downtrend that we've been in for the better part of 8 years. And yeah, it's insanely cheap, but also a very messy chart, in my view here, because it's basically, yeah, it's just messy. But internally here, I will still say that once you start to clear that bad boy right there, that to me is again, the big go-go, because that's the high in 2020, and then that to me is the big one there. So roughly 0.4 in the ratio, and the silver juniors is a better play than silver. So that is, higher leverage, but it should outperform silver. And again, both can do well. Don't get me wrong, but again, you should start to allocate some of your stuff from silver to the miners. So
mhm. Yeah, I think this is a good opportunity here. That's what I think.
yeah,
I like SILJ and the Silver Juniors here. They're cheap.
yeah,
They're
they
gonna they're
are.
gonna
And
rip.
again, yeah, and looking at again, look at this. This is the majors, by the way, but still,
That's the leaders. Yep.
this is from a technical point of view, once we start to trade north of, 43, 44, if you're not into, again, that's fine. But to me, this is a golden opportunity to have a massive investment for the next 3 years or so.
Agreed. Yeah,
So
these
yeah,
look these
that's
look insanely good. It makes me want to buy more, but I don't have any money. I already bought them all.
you're totally locked in. So yeah, that's all I had
Yeah.
for this video here, Andy. A quick recap of what's interesting in my view. So
Okay, and if people want to follow your work, how do they do that?
thank you for asking, Andy. Again, Twitter or X. I've been doing that for like 5 years, and then I have the Substack and the YouTube where I post stock picking and similar stuff to this on the Substack for members there. So again, check it out if you're interested. And yeah, thank you for having me on.
Yeah, yeah. Thanks for coming on, and thanks everybody for viewing. In the comments section, write some nice comments for Casper for coming on, and that's all I've got for today, guys. So we'll catch you later.